So we're going to start first with the form 3508S, and this is for loans of $50,000 or less. So depending on your bank, you may be submitting this information through an online portal, but we do recommend that you complete the form as a tool to prepare your submission to that portal. If your bank is not offering an online solution, they may actually want a form submitted in a PDF format. So we're seeing a lot from the banks. So, some of the obviously the bigger banks have these portals. Some banks have offloaded the processing of the loan forgiveness to CPA firms, and other banks, smaller credit unions, et cetera, don't have the capacity to build these portals. So they'll be dealing with it. So you've got a wide variance of how the banks are going to be handling this. So we're going to walk through this together. This is the top part of the form, and this is really your business demographics. So very straightforward. As we move down, you've got your loan number and the lender number, as well as the amount that was funded and the date that that disbursement happened. And that date's very important, as we'll see in the next section here. The SBA is asking for employees at the time of the application and also at the time of forgiveness. Now, this shouldn't be mixed in with the full-time equivalents, because that's a different calculation. This is just a number for their statistical and to help them process the loan. Next is the EIDL advance amount. That was the economic injury disaster loan. And what we've heard from the banks is this is the single biggest mistake, folks not putting in their EIDL amount or their EIDL application number, and then the amount of forgiveness that you're requesting. And then they're asking borrowers to make certifications and representations. So the first part is that the amount you're asking for forgiveness doesn't exceed the PPP loan, and that you followed the guidelines that were set forth with respect to total amount of compensation for employee, for owners, and also the business expense. So this is the different percentages. You're also saying that you didn't use these for fraud, and you're verifying the payments for payroll and non-payroll costs. So what's interesting is you're not asked to put the payroll amounts on this form, but in the next one, I have submitted to the lender the required documentation verifying payroll costs. So borrowers using this S form still have to bring all that payroll data and the other data around other eligible costs if they choose to use them. So, and this is part of the friction with the banks. The banks are saying, okay, I have these documents, SBA. Am I responsible to verify them? And what happens if fraud is detected? So this is part of the gridlock. And then you move down to the information provided is correct. The tax documents I have submitted to the lender are consistent with those of the borrower. So really what they're saying is when you submit your payroll expenses, a borrower needs to include the 941, which is the quarterly report. So the quarters impacted are Q2, which would be April, May, June, which was prepared in July. Then it would be Q3, which takes you through September and prepared in October. And then if you continued and your covered period went into October, technically you'd need the 941 that we'll produce in January for the last part of the year. So that's part of what you're saying is these are the same documents I've submitted with my payroll. And then you finally agree that you will make these documents available. So that's it for the S form. There is no requirement to retain staff or have FTEs. So this is their S simple version, again, for 50,000 or less. But remember, you need to submit all the documents behind it. And at the bottom, of course, you need to sign it. So before we move on to the EZ form, one of the first questions that needs to be answered by every borrower, regardless of the loan size or form used, is establishing the covered period and, if applicable, the alternative payroll covered period. So we created this 2-page download, which is basically a calendar with the instructions. But I just want to walk everybody through it. So the covered period begins. You want to take this part, Matt?
No, I was going to say, can I stop you there for a minute? So the 3508S does not indicate anywhere on the form that the payroll covered period or alternative covered period to be identified and submitted. You just mentioned that these should be included as part of the forgiveness process.
So again, that simple page is basically saying, I attest that I did everything correctly. And that's the form that gets submitted. But behind that, one of those check boxes is, I've submitted my payroll along with my 941s. So to do that accurately, you need to know what is your covered period. So let's walk through that. So if you start at that top there, it says select covered period. The beginning is the date you were dispersed. So that is the actual day that the money wound up in the borrower's account. And that's the beginning of the covered period. Now, borrowers who had loans before June 5th can still use 8 weeks. So they could make the end of their covered period that 56 days. Most will take 24 weeks. And that 168 period then is the covered period. So the covered period is for non-payroll expenses if someone decides to use the alternative payroll covered period. So this is the important thing. So let's say I get funded on a Wednesday and I'm a bi-weekly payer because the alternative covered period works for weekly and bi-weekly. This allows me to slide to the beginning of my next payroll period, start to accumulate hours and wages, and that's the beginning of my alternative covered period. The benefit, you don't need to prorate or run half a week's payroll and make these calculations very complicated. So again, the alternative covered period is available for weekly and bi-weekly borrowers who want to shift to the beginning of the start of the next pay period and then can continue either 8 or 24 weeks. And that's the end of their covered period, because all of your payroll reports, if you call Connect Pay or any other payroll provider, you're going to want to request all of your payroll reports based on that payroll covered period. And if you're using the alternative. Now, if you're monthly, they didn't give you that option. So folks then have to stick with that, the day it was funded, and they will have to, if that conveniently landed on the start of a pay period, great. But if it didn't, they're gonna have to run the reports based on partial payrolls, which just makes the calculation a little bit more difficult. But this is super important. Every borrower needs to do it. So we recommend downloading this and keeping this for your records. All right, so moving along to the 3508 EZ. So this form is available for, one, if you're self-employed, or you did not reduce salaries more than 25% and did not reduce the number of employees or average hours paid, or you did not reduce salaries more than 25% and were unable to operate due to COVID. So this form came out after the original, but before the S. So my thinking is as follows. If you're self-employed, if you have under 50,000, I'd go for the S form. It's pretty hard to be self-employed, have no employees, and got a PPP loan for over 50,000. I'm trying to figure that out, but you'd have to be, an extremely well compensated type of consultant for that to fit. So I would say that most self-employed people will use the S form. So then it really gets down to, did I not reduce annual salary or hourly benefits, or was the nature of the CDC guidelines or my state requirements such that I comply with the second checkbox on the front of that form. So if you're looking at the easy form, you need to download the instructions and read those two alternatives carefully. And if you fit, then you're able to go ahead and use the easy form. And we're going to fill in some of that gray area around what are acceptable safe harbors as we move through here.
So top portion is your business information. You have legal name, DBA, address, EIN, phone, email, and contact information. Then moving down a bit, again, you have your SBA PPP loan number, lender name. The PPP loan amount is the amount that was put into your bank account for the loan disbursement date, the day that the loan was dispersed into your account, which becomes the start of your covered period. Moving down.
Yeah, so next section, this is the same as the 3508 S, the employees at the time of the application and at the time of forgiveness. And again, they don't calculate into the FTE, but the SBA wants those. And again, the idle loan and the idle application number, very important. Then moving down, now we just covered this with respect to weekly and biweekly or semi-monthly, monthly, other. So you put in your covered period, which is the fund date to the end of your either 8 or 24 weeks. And then if applicable, you would put in the dates for your alternative payroll covered period. Now this next section, there are out of 5.2 million loans, 30,000 are over 2 million. So if you do have a $2 million loan and you check that box, you'll be audited. There's also different forms that need to be added to it. And you've got to quickly turn those around from what I understand. But I don't believe anybody on the call here fits into that. If somebody does and they want to email me, my email address will be at the end and we can sort of discuss your situation. So we'll move on to the next section here. And this is, now I see some questions coming in. We have in our payroll system specific reports. So once you know your dates of your covered period, you can request from your client service rep a PPP payroll cost report, which does all the calculations to fill in into line 1. And we also have reports on the Schedule A worksheet, which allows you to calculate, and it does the math of calculating your FTEs. So we'll get to those reports in a little bit, but let's just walk you through this. So you've got line 1, which is your payroll costs. And the reports may be different for different payroll companies, but there is consensus on what those costs are, and they're in the instructions. Then you've got your mortgage interest, rent if applicable, and then your utility payments. And then followed by, you basically add up lines 1 through 4. Then you put in your loan amount. And here's where you do the math, right? You take your total payroll costs, and because 60% is the threshold, you divide line 1 by the 0.60, and then the final line is the amount of forgiveness. So what we'd like to do is show you an example. This is a super simple example. I just picked a company that had $1,000 a week in payroll, and they selected the 8-week time frame. So they had $8,000. They don't have a mortgage, but they pay $1,000 in rent, and they had a $500 utility payment. So we add all of those up, and they've got the potential for forgiveness, $9,500. They got a $10,000 loan, and then when you do the division, the math on line 7, where you go up to line 1 and divide by 0.60, that shows you that they have a potential threshold of 13,333. But what you do is you pick the smallest of those next 3 lines. So they got 95% forgiveness in that scenario. So the next slide is a different way to approach this. And we went back to the same company. We just selected a 24-week time frame and made it super simple. Just going to do payroll. We're not going to care about the mortgage interest lease. We're not photocopying any bills. And we put that $24,000 into line 5. We got our $10,000 loan. We do our math, and voila, we got total forgiveness. So we think there's a success strategy here. It won't work for everybody, but the amazing thing is that that top line, they let you keep all of the payroll in the covered period to meet your threshold. So we believe that borrowers who opt for 24 weeks, whether it's covered or alternative covered period, and then they submit 100% payroll, they're taking third-party branded payroll reports, right? So this is not something that they can doctor up. Also backed by the same tax filings, the 941s, is the easiest way to get past the banks and get past the SBA, because you're not complicating your application. So we believe that they built this form to kind of drive that way. This thing was called the Payroll Protection Program, and it certainly got modified almost constantly. But we think this is a super successful strategy. All right, so moving along, you've got the same type of certifications that you need to make, and they follow the S form. So I won't go through each and every one of them. But at the bottom, you've got to initialize one of the following. So this is, now that we're in the EZ, the FTEs come into play, your full-time equivalents. And you have to attest to either, I didn't reduce the number of employees or hourly wages, or the reason I reduced them is because I was unable to operate due to COVID restrictions. And if you go through the CDC website and Health and Human Services, OSHA, and then you look at executive orders for your specific state, there are just an enormous opportunity of ways to document restrictions on business if you happen to have a shortcoming there. And then there's also there's a borrower demographic page with all of these. And if you see up at the top, it says optional. And this is really data collection for the SBA. So again, it's optional, so we won't go into that. And then Matt.
Yeah, and then the last option is the original 3508, which was introduced first. This form is required if you do not qualify for the other two simplified forms. If you're in the small minority that needs to use the standard form, we have a Schedule A worksheet available in both PDF and Excel to support. And then, as previously discussed, the Paycheck Protection Program Flexibility Act established an additional safe harbor to the loan forgiveness reductions and full-time equivalent headcounts for the PPP. So this is referred to as Safe Harbor 1. Businesses that weren't able to operate at the same level between February 15th and the end of the covered period because of compliance with guidelines issued between March 1st and December 31st by the Secretary of Health and Human Services, Director of Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration, all qualify for the safe harbor. In addition, the SBA recently announced or clarified that this safe harbor includes state and local governmental orders in addition to the federal compliance guidelines. So overall, it appears that the SBA will be broadly interpreting this safe harbor and anticipates that the vast majority of borrowers will rely on this particular safe harbor as opposed to the other available safe harbors. If a borrower intends to certify that it qualifies for the safe harbor, the PPP forgiveness application requires the borrower to maintain documentation supporting the certification. This documentation includes copies of relevant governmental orders, copies of the applicable requirements for each borrower location, and relevant borrower financial records. So I pulled a few off the mass.gov website here, just a few examples. One that I use was a restaurant, which reads, tables must be positioned so to maintain at least 6 foot distance from all other tables in any high foot traffic areas, i.e. routes to bathrooms, entrances, exits. Tables may be positioned closer if separated by protective non-porous barriers, structural walls, plexiglass, not less than 6 feet high, installed between tables in high foot traffic areas. Some other examples for the retail industry are 50% of the building's maximum permitted occupancy as documented in its occupancy permit on record with the municipal building department or other municipal record holder. Another one here, in any case, no enclosed space within the building shall exceed occupancy of 10 persons per 1,000 square feet. So again, this is a very broad safe harbor, and all indications are that the majority of businesses that experience any restrictions can make a reasonable case of why employee counts have been affected with supporting documentation.
And then Matt, on the safe harbor too, basically said if somebody reduced their FTE levels in the period beginning in February 15th and ending April 26th, and then the borrower restored its FTE levels by no later than the end of the year, then that's the second safe harbor. So if someone had a very intense slowdown, let staff go, but then was able to bring all of that staff back, then they qualify for the safe harbor, and again, can not only use this form, but won't be penalized or have the forgiveness prorated. And then in addition to Safe Harbor 1 and Safe Harbor 2 are a list of the reduction exceptions. And I think we've talked about these in the past, but basically if a borrower makes a good faith written offer to rehire an employee and the employee rejects, and we saw that a lot when the additional $600 unemployment benefit was available, that is an exception that won't impact your forgiveness. If you fired someone for cause, if they voluntarily resigned, if they requested and if they asked for less hours, and the employer and employee agree, again, document that. And then if the borrower made a good faith offer, but the employee rejected those offers for reduced hours, et cetera, that those all qualify. So, and they kind of work in concert with the Safe Harbor 1. So again, any of these examples do not impact the borrower's forgiveness. So I put up here the Schedule A, and the reason for this is part of the 3508 form, but what employers need to know is on the right side of that Schedule A worksheet, we've built a report that you can basically ask. It's the PPP Schedule A worksheet report. So it's available, just contact your client service rep. And there's a couple things that you can do with this. Now, I would request it both in PDF and in Excel for one important reason. You're not supposed to have owners in this report, but never before in the world of payroll did we document who was an owner. So very often family members are owners. And so the Excel allows you to remove those individuals that are owners, and the instructions are right there, and then recast the PDF and save it for your documentation. But this tool is very effective for looking at your look back period and moving forward and calculating your current FTEs. So folks should use that and understand what their covered period is, run the report. Now, again, if you have the S form, you don't have to worry about this, but I don't see a problem with anyone requesting it and understanding where their FTEs were, documenting, because I believe that Safe Harbor 1 is pretty broad and very useful for most people not to have FTE count reduction. So the things you want to consider is there's two ways, and we do it in our report to calculate the FTEs. Matt, I think you discussed the first one. You add up all your part-timers and divide by 40, or you can just count every part-timer as 0.5. Anyone who works full-time, 40 or more, is a 1. Anyone who works less, and I can give you an example, say an ice cream shop has a lot of teenagers and they work 6, 8, and 10 hours, then the 0.5 is pretty advantageous. If someone has a lot of people working 30, 32 hours, you'd want to add up all those hours and divide by 40. Regardless of the method, you have to use the same method for your look back period as you do for your measurement period. So that's important. Then remember, there are 2 safe harbors and 6 FTE reduction exceptions. They all work. And then you've got to determine your payroll period, your covered period, and your alternative if you're going to use that, if you're able to use it. And then remember to retain all your documents for 6 years. So we recommend you completing our little calendar, keeping that with your package.